Okay, guys. Um, Welcome to another class. Here we are again, and welcome. Okay, so let's get down to business without you know no long talk, no need for that. So in the previous class, I was able to teach you guys. I think about few classes we've been hosting. The last three classes have been about candlestick. It's been radiating around candlestick because if I open my chart right now and I even if you go to your own chart, basically everything is candlestick. Everything on the screen is candlestick. Okay, there is nothing else, just candlestick. So it is our knowledge and our understanding of this candlestick that help us make money because basically that's what we have. That's the most detailed infographic presentation of price that we have. So I've been trying to help you understand this because even at the end of the day, as an MBM trader, you cannot do without it. Okay, I don't know if other approach to trading does not use it or they don't use them, but in the market business model, we deal with price, and candlestick is a proper representation of price. So it tells us okay what price is doing, and after we have decoded the information it's trying to give us, we make profitable decisions. Now, so far, I've been able to gradually, step by step, take you guys through the process of, understanding how this market works and how you can position yourself to eventually become a profitable trader by trading this market. And it might look as if, oh, these classes are long. These sessions are taking time. I think we're on MBM 015. That means we have about 15 different classes. Each of these classes about an hour long or almost an hour long. And 15 different classes, and we are still on this topic because that is what it is. This is the simplest way I can teach you to become a profitable trader. I could definitely find a way to add everything up and rush it, but I, I don't want to come back to teach this thing again. That's number one. And secondly, I don't want a situation whereby you become confused because of I withhold some information or because of I was in a hurry or I compiled something. What I've been doing is when an apprentice goes to learn, let's say he wants to learn carpentry, for example, and somebody when someone goes to do apprenticeship under a carpenter to learn carpentry, um, the master, which is the carpenter, would take a hammer. He can take a hammer and tell the apprentice and say, okay, you see this thing is called a hammer. You see this one, and then you take a nail. You say, you see this one is called a nail. You take a wood. You say, you see this one is called a wood. And then he now say, okay, anytime you take a nail and a hammer, just drive it through the wood. That is the master showing the apprentice how okay, the master is just showing the apprentice what those things are. This is an hammer, this is a nail, this is a wood, this is a an hacksaw. Okay, this is a saw. This is he, he is only showing the he's only telling the apprentice what those things are, but he's not showing to the apprentice what those things are for. But if the master picks up an hammer and tell the apprentice, you see this hammer, its job is to hit. So you can use it to hit nail, you can use it to hit wood or different things. And then he picks up a nail and said, this nail is what holds woods together. And he goes ahead to show the apprentice the usefulness of these nails in several ways that it can be useful. And then he pick up a wood and also told the apprentice, this is a wood. That is what makes up the furniture. There are different types of wood. This is how you take care of a wood. This is how to use wood. This is how to know the best wood. This is how to know the worst wood, etc., etc. Now, between the first apprentice and the second apprentice, who do you think would be most probably successful in the business? Definitely the second one. Why? Because he was not just shown the tools, he was also he was taught about the tool. He was taught, he was shown the usefulness of the intrigue, everything that have to do with every tool, everything he needs as a carpenter was shown to him, explained to him properly in total. And that's what I'm doing to you guys. You might say, oh, the classes have been long and all. It's easy. If you want a sharp or a quick class, I can easily create, just within the next 2-3 sessions, we are done. But then what kind of apprentice would that make you? Because at the end of the day, mastery comes from your understanding of something, not just your knowledge of it. So an apprentice who knows a hammer and an apprentice who understand what an hammer is, both of them are two different people. In a scenario whereby both apprentices cannot find something to um you know um something to hit, what's it called now, something to hit a nail or to drive in a nail, the apprentice number A would always look for hammer, because that is the only thing. He does not understand the job of an hammer. He only knows that, okay, an hammer is used to drive nail. So if he does not see hammer, he's not using any other thing. But apprentice number B might be able to improvise and use another tool. Why? Because the goal is to hit the nail. And since hammer is not present, he can use another thing that is in relative to an hammer that has the same thing. Maybe he might use a martel or something like that. The point is that he who understands is the one that knows how to become a master. It is beyond your knowledge, it is your understanding of that which you know. Because it is from knowledge, it is from understanding, it is from knowing of something that you become someone who understands that thing. So you don't just stop at knowing, you move on to understanding. And that's what I'm doing. That's what I'm trying to help you achieve as a trader. That's where I'm taking you to. That's our goal. That's our drive. That we understand how this market operates and we make money from it. That's the point, to make money. So when you see me break down these classes one after the other, I'm not in a hurry. Today I teach this, another day I'm teaching this. You see, the last 3 classes have radiate on candlestick, but on different aspects of a candlestick, until each of these topics are exhausted. Once they are exhausted, then we can move to the next stage. By the time it is exhausted, then I know that your lack of becoming a profitable trader is no more my fault. It is now left with you. How much notes have you written down from the lectures? How well do you understand what I've taught? How many times have you rewatched these videos? I understand, because this is a free class. Majority of people might not take it serious, but don't be that kind of person. This thing I'm teaching you is the key to profitability, because this is what have helped me make millions from this market. And that's what I'm giving to you. Okay? Yesterday I taught us how time frame, in trading works, and how a candlestick represents a time frame. So when I say 10 o'clock, so when I show you this candlestick here, It's only showing a time frame. Every candlestick is a representation of a time frame. Okay, it's the representation of time frame. So time in MBM is not, the way you have been taught, based on London session or all those things. That's not how we do it in MBM. Time is what we call it. Don't worry, we'll dive deep into that part, but this is just for now. We're still talking about candlestick. So now that we understand how candlestick comes together to, you know, how 1 hour plus 1 hour equals 2 hours and all, let's dive deeper into understanding time frame. Okay, let's go deeper. Let's drive more into this knowledge. Okay, what can we? Well, let's go deeper. That's what I'm just trying to say. Now you see, you see, everything that happens on a candlestick has it can be explained. Hmm? How? Price opened here, closed here, created a high, probably at this region here. Let me just do that. And then created a low. Now, this is a simple candlestick. But you see, each of this region are price point. This high is the highest price. This close is the closing price. This open is the opening price. This low is the lowest price. So they are price points. Now, you see, how do I say this now? When let's go deeper into understanding price. Okay, let's go to price. You see, price in the market revolves around your hold on. It's the only thing in the market that does not change. Price does not change. Regardless, yesterday I taught you, I said 1 hour plus 1 hour would equals 2 hour, and there's a way to be shown on the candlestick. I told you if we have two, let's say a bullish candle and a bearish candle, you do the minus, and then if we have the similar candles, you do addition, and it will give you something different. But you see, price does not change. If I go to 3 hours, if price would be constant, price is constant on all time frame. Candlestick might change on all time frame. Okay, so this candlestick that you are seeing on this time frame, when you go lower, you might see, let's say this is 1 hour candlestick, and then you go to 30 minutes. That means we are looking at two different 30 minutes candlestick to make up this 1 hour, and both of those two candlesticks will definitely be different in the way they were created, right? But what created those candlesticks? Price, right? Transactions that led to price here, exactly. Now, price that are created is what we use as reference as traders. Okay, because this price remains where they are, they don't change. Example, let's say I am on the 1 hour time frame, and you see this high, the high of this high here is, let's say, $10. Okay, that is the highest price in this time frame. Remember, candlestick represent time frame. So when I talk about candlestick, I'm talking about time frame. Yeah. So in this time frame, time frame, this high here, the high of this time frame is what? $10. And then it opened at let's imagine it opened at $5. And then the low is at let's say the low is at $2, and then it closed at let's say $8. $8. So 2, 5, 8, 10. Now, please pay attention. This is the critical part. You need to understand this. You see, As MBM traders, we trade price. But because of if we remove because of we need a remember when I was teaching you that price, there are different type of charts, and charts is just graphical representation of you know of something. It's an infographic. And I was explaining, you know I think that was an MBM 11, or I can't remember though. Just if you have been following up on the class, you will understand what I'm referencing at. Now, please pay attention to what I'm about to explain to you. We trade price, yeah, but we cannot see price because, we don't have the ability to see price. The only way we can see price is if we can represent what is happening in the back end graphically. And that is what led us to come to using candlestick. Now, your candlestick tells you what price have been doing. Either price have been going up or a price have been coming down. So if your candlestick is telling you that price have been going up, how do you know? And this is why, like I said, the color of the candlestick does not matter. So let's pay attention to what I just showed. When a candlestick open, it opened at what price? At $5, and then created a low of $2. Now, while it was going to create this low, you could say, okay, price is selling, right? And you will not be wrong because price was actually selling. You could say, oh, market is bearish. You are not wrong because that's what market has been doing. Yeah. But then when we reference this time frame, yeah, price opened at $5, created a low of $2, and then went up to $8, and then closed finally at $10. Now let's start from the lowest price. The lowest price that was created was what? Was $2. Followed by what? Followed by $5, followed by $8, then $10. 2, 5, 8, 10. You see how it's increasing. So in essence, what is price doing? Price is moving up. And how do we know that price is moving up? It is not by trend. And this is why when I was teaching you guys in MBM 01 or 02, I said trend. We don't trade trend as MBM traders. We trade price. And everything will make sense. We trade price. We don't trade trend. We trade price. Please follow up. There's nothing like bullish or bearish trend as far as MBM traders are concerned. Okay? Now, everything is going to make sense. We're going to piece all of them together. Now, when price $2, that is the lowest price we had, and $10 was the highest price we had. So we had 2, 5, 8, 10. Now, sorry, I can't write. I can't put a figure on this thing. I wish there's an easier way I can do this, but just follow up, okay? I'm not the kind of teacher who comes to the class with pre-recorded or I don't know how to do all those edits. I just come and I teach my students from my heart, from my knowledge, okay? It is your job to follow up. Now, please pay attention. I'm going to demystify a lot of things, and I'm going to also help you build you up. When price opens at this point and created a low, and then went up and closed here and closed here, the point is price was going up. You will say price is bullish or the trend is bullish. But the truth is that how do you know that this is the bullish trend? Or how do you know that price is bullish? Because of this candlestick. I hope I get you get what I'm trying to say. This candlestick now this is what I was talking about. When we as MBM trader, we don't reference time frame as 1 week, 1 day, all those things. No, we don't do that. We reference time frame as candle. So you see this candle here, it could be the daily candle, it could be the weekly candle, it could be the monthly candle, it could be 3 hours, it could be 4 hours, it doesn't matter, whatever, it doesn't matter. Okay, we don't do those rules. Time in MBM is framed into candles. So let's imagine this is a daily candle. This is a daily candle. That means from 12 midnight to 11:59 midnight, this is what this candle is showing us. Okay, and what can this tell us? It can tell us that for the whole of that day, what was the trend? It was a bullish trend. Simple. Now, please pay attention. Remember when I was teaching you about candlestick combination, I said this candle plus this candle is what makes another candle. That means 1 minute plus 1 minute makes 2 minutes. And these 2 minutes go, this 1 minute can make up 24 hour. These two minutes can make up 24 hour, 3 minutes, 1 hour. All candlesticks combination, all of them comes together to eventually makes up this daily candlestick we are looking at. So on below this daily candlestick, now this is the rule. Below this daily candlestick, any time frame below this daily candlestick, we can go lower to analyze it and we can reference them. But you see, anything above this daily candlestick, we can't reference them. Why? Because we can only say what has happened within 24 hours. We don't know what will happen in tomorrow, but we know what has happened today. I hope you get what I'm saying. So this 24-hour candle, if you are on the 5-minute time frame, and that those people on 5-minute time frame would probably be seeing something like this. And what would they call it? They will call it bullish trend. You see that, right? Those people on 15-minute time frame would also see something similar and call it bullish trend. Those on 30 minutes, the lower the lower you go, the lower the trend and the choppiness of the market. The point is that that thing you call trend was only a time frame bias. I hope you guys get what I'm driving at. So there's nothing like trend, only price. Price came from the low point and drove up. So if you now go lower into the day and you see, let's say on the 5 minutes, you are seeing a bullish trend, you can call it uptrend. Well, that's because of, now, do you know that, let's imagine you go to 5 minutes now and you call it an uptrend. Let's imagine. Do you know that every single 5-minute candlestick also have its own representation, which means, let's imagine this is the 5-minute candle. Remember, I told you that based on time frame, candlesticks are not different. Okay, candlesticks are not different on any time. The same candlestick on 5 minutes, the same candlestick on 10 minutes, on 1 hour, on 1 monthly, on 1 yearly, on 12 months, on 6 months. Candlesticks are similar on all time frame. Now, we have used an example of 5 minutes, and we say, okay, if you go lower to, let's say you go lower to, I'm sorry, we use an example of 24 hours rather. And then we now say that if you go lower, maybe like on the 15-minute candle, you'll be seeing a bullish trend, right? And many people call it uptrend or bullish trend. Good. Now, and I'm telling you now that is, we don't trade trends as MBM trader. Let me explain why we don't trade those trends. Do you know that that thing on the 15 minutes that they call bullish trend, each of the candlestick on that 15 minutes is still the same thing as a single candlestick on the hour, on the 24 hour? Because I mean, if we pick one time frame, one candle on the 15 minutes, just pick one on the 15 minutes, and then we now go lower. Let's say we go to 30 seconds or 1 second candle. Do you know that if this 15-minute candle was, let's say it's bullish, that means on the 1 second too, what would we see? We would see bullish trend. And they will still call that one what? A bullish trend. But what if we pick one 15-minute time frame, but it was selling, yet 24-hour time frame closed bullish? So let's say we pick one 15-minute time frame now, and then and we go lower to the seconds time frame, and this 15-minute candle closed bearish. You get what I'm saying now? I will go to 1 second time frame, and we'll see a bearish move. Now let's show the difference. On the daily time frame, price was moving higher. It was bullish. And on the 15 minutes that we picked out, price was bearish. Now this 15 minutes was picked out from this same 24 hour. I hope you get. That means those who trade 15 minutes, this particular candle, they were calling it bearish trend. Those who trade this 24-hour candle, they were calling it bullish trend. So who is right? Who is wrong? That's trading for you. That's trading for you. And that is why, as MBM trader, we don't pay attention to trend. Now, imagine you are saying, oh, this is a bearish trend, then it must be selling. That's trash. That's jargon. We trade price. Because when price gets to a point, it will show you what wants to happen next. For example, this candle here was, we were imagining that this was a bearish candle, yeah? That means price, that was the highest point, and this was the lowest point, lowest price rather, and it closed bearish. What is price telling us? Price is telling us that it is selling. Here, on the higher time frame, price is telling us it's bullish. Now, how does all these things correlate? How do they correlate? And this is where understanding comes in. You see, the lowest price, then from the lowest price to the opening price, the lowest price, the closing price, and the highest price. All these price points, they are reference points. They are reference price. We reference them, we use them. And how do we use them? Don't worry, I will teach you. So that at the end of the day, you know what is happening. Because remember, based on orders, based on orders that I taught you guys, I said bid, bidding offer and asking offer. Bidding is the price you are willing to pay or for a commodity. And since you are paying, you are looking at paying at lesser price, right? Now, and asking is the amount that someone who is selling to you, the seller, or is willing to, the highest price the seller is willing to give to you. So for a bidder would always look for the cheapest price, and an asker will always look for what, the premium price or the expensive price, a higher price. Okay, now you see, sell candles or bullish candles does not tell us who is in control. Okay, it does not, they don't tell us, because as far as I'm concerned, this could be just bullish orders that are being paired up. Okay, and then I mean this could be just offers coming into the market in form of what, bearish orders, and they are yet to be paired. So when you see sell, when you see a bearish candle like this, it could just be bearish, offers, ask offers coming into the market, and bidders are coming. Definitely there must be bidders, and once these bidders match up this odd offer, price would go up, right? Exactly. Or it could be that bidders have bidded, and then this is the ask offers that are matching the bidders. We don't know that, we cannot see that. But what can we see, and how can we tell? And this is where we get to that stage, I'll teach you. This is where MBM, understanding how MBM interprets candlestick, comes into play. So as traders, we don't try to predict or try to know, we don't try to what's it called now, know what will happen to the next candle. No, it's wrong. We focus on this present candle. Yeah, so I'm gonna delete this now. Well, I'm gonna delete this now because I don't need it. We don't, you see this bullish candle here, how do we know what the next candle is going to do? By understanding this one. From this narration alone, what is this one telling us? It's telling us price is bullish. Now, it's the next candle might decide to be bearish and close lower. We get, it still does not remove the fact that price was bullish on this candle. So how do we know what the next candle would print? And this is where we'll have to now go deeper, where I will have to go deeper into explaining how the market business model, traders interpret candlestick. Now, our interpretation of candlestick is what will now bring us back to what I explained to you guys: volume, volatility, and the last one, liquidity. Hmm? Exactly. This is going to be a very short class. I'm going to end it here because the next class I'm going to show you, I'm going to be teaching you would the next class I'm going to be teaching you would be what we're going to be covering is how we interpret candlesticks. That way you will know that, okay, this particular candle, this is it, this is um how we are supposed to interpret it. How do we know if the next candle is going to be bullish, bearish? How do we know where price is heading to? All those things is we cannot do without not understanding them. And I don't want to start in this class. I want us to move to the next class, in our next class, so that I can be able to show it to you. I will show you where bid offers are in a candlestick. So what I'm going to show you is I'm going to show you where the bid offers are and where the ask offers are in a candlestick, and how they get paired, and when they get paired, how what happens after that, and how we can see these things as trader, how we cannot see them, but there are ways, practical and tactical approach to trading them. Okay, so from here ends, our trading is going to our classes is going to involve practical examples and all those things. So let me show you what I just taught you. Now let's go to the chart and let me show you. So I'm on the daily time frame, as you can see on my cursor here. As you can see, this is the daily time frame. So I'm just gonna reset the chart. So let's try to pick just one day. Let's pick this Friday. Now, as you can see, this particular day closed bullish. How do I know that I closed bullish? Despite that, these two candlesticks are the same thing. Because number one, see where it's closed. Sorry, see the previous candle closed here. Next one opened and closed higher. It didn't close below the open. How do I know that this is not where it opened? Because this is where this one closed. Get so this is the opening, this is the close. Another way that I can tell if a candlestick is bullish, yeah, is to pay attention to price. You see this price point here. You see this O means open. I'm sorry, this O means opening price. This H high, this L means low, this C means close. So let's pay attention. I'm on this time frame, yeah. So let's look at the open. The open is 0.62014, and then let's go to the close. The close is 62171. So 62014 and 6217. So 171 is definitely higher than 14. So it closed higher than it opened. I hope you can see that now. Yeah. So if you are doubting the infographic on your candle, you can pay attention to price point here. Okay. So now that we know that this particular day closed bullish, now pay attention. I'm only showing you how many candlesticks. Just one candlestick. Sorry. Let me delete this. I'm showing you just one candlestick. So let me cover it in a box. Exactly. Just this candlestick. Now let's go to, let's say, 1 hour, and let's see. Now on the 1 hour time frame, I'm coming. I need to make sure that I'm not confusing it. It has to be, yeah, this, yeah, it starts from this it, this box here. Now, on the 1 hour time frame, well, majority will say, oh, this is a consolidating market, where for those who believes in all those trend, whatever. And this is why, but if we go to the daily time frame, now on the 1 hour time frame, they will call it consolidation. And consolidation means price is just choppy, going up, coming down. But on the daily time frame, where we went, when you know where we are coming from, sorry, on the daily time frame where we were coming from, price was actually increasing. I hope you see the clarity there now. You see how paying attention to candlestick instead of all these things brings clarity to what you do. The candlestick tells us straight off that price is going up. And then if you now decide to say, okay, to determine price by this, you can, because this is choppy market. But despite that it is choppy market, it was still bullish. And how do we know that it was bullish? Because you see this close, this is the open here, and it's closed higher than it's opened. Now, each of these candlestick represents one hour candle. And if we try to say pick out one candlestick, let's say we pick out this one. Now, you see this particular one that we picked out. Let me draw a line on it. This particular one that we picked out. If we go to 15 minutes, we will see that it was bearish. I mean, this candle is a bearish candle, of course. So if you go to the 15-minute time frame, you can see it was bearish. But at the end of the day, price was bullish. Yet inside that bullish day, we're able to still see bearish candles. Now, if I pick another time frame and another time frame, another candle, another time frame, and we go lower, I'm very sure, let's say I pick this bullish candle here, this bullish candle here, and I go to 1 minute time frame, I'm very sure I will see bullish moves. See that? Opened lower and closed higher. See that? So you see bullish, bearish, bullish. You see how all these things, they are interwoven. So it will be at your disadvantage as a trader if you stick to one thing just because you believe that is what it is. Oh, it's consolidating. Meanwhile, somebody who understands it have made money from it. He bought at the open and then he make his money at the close there. It's done for the day. Oh, it's consolidating. Yet somebody who is trading 1 hour was able to understand this candle, what is happening, and sold, and it's done for the day. Oh, it's consolidating. And somebody went to 15 minutes and was able to know that, okay, now that price has dropped here, is willing to buy, purchase, and then drove price up. Meanwhile, you, who is still a trend believer, you are crying and hoping and praying and worshiping that, oh, let it go up, let it go up, let it come down, or price is consolidating. We don't trade consolidation, and that's fine now. And then we don't trade trends, and that's fine now. Okay. In our next coming class, we'll dig deeper, and there will be more exposition. Okay. I'll see you in the next class. Bye bye, guys. Okay.